Ladies and gentlemen, welcome to this special presentation from Forbes India, the post-budget analysis presented by IDFC First Bank, where we try and unveil really what the FM Nirmala Sitharaman has brought for us today. Obviously, the headlines and everything that people have spoken about in terms of a very capex-driven, growth-focused budget is what we have here. And it's obviously brought a lot of cheer to the markets, which were up about 840 points on the Sensex. But what we're trying to understand is that is it enough to boost growth, to actually create jobs, which were lost during the last 2 years of the pandemic, and to unreveal that, we have two special guests with us today in the evening. One is Mr. Ashish Gumashta, the MD and CEO of Julius Baer India. Hi, Ashish. And then we have Mr. Ranen Banerjee, partner and leader in economic affairs at PwC India. Welcome, Ranen. Great to have you here on a tough day. Thank you for taking out time to join us on this special speech. Uh, I'll come with you, Ashish. First, we're looking at a scenario where obviously, Nirmala Sitharaman spoke the right words. She spoke about capex spending. She spoke about fiscal deficit being maintained. She at what were the FY22 estimates. She spoke a lot more about jobs, about healthcare, startups. But what is that? If there was a one takeaway for you, what was the biggest takeaway from today's speech?
Um, if you see the big focus the government has given to the digital transformation, it's the big takeaway. So, when she started her budget, she said that I'm here to bring a stable and productive regime. And I think that's what was the real pleasure and surprise of listening to her today. Everything was predictable, there were no surprises, a lot of stability came in. And the government very clearly conveyed to us that, look, we are progressive. We want private sector to grow. We are here to support them. We want predictive and stable regime. And the quick adaptation to digitalization. I mean, if you read the fine print, it's amazing how the government has looked into it. And of course, we can talk about these things in great detail, but that's my quick take on it.
Okay, Ranin, same question.
Yeah, hi. So I think for me, the big takeaway is the sustainable development that the government has focused on. And there are quite a few aspects to it. So the net zero commitments that the Prime Minister made in Glasgow, I think this budget is a start to that journey. And we have seen that. One of the examples is the battery swapping policy. Now, clearly, that is going to enhance the adoption rates of EV. Now, the 5 to 7% blending or the pellets into the thermal power plant generation now of using biomass means that's clearly a sustainable development aspect. Then there are a lot of announcements around the circularity on the extended producer responsibilities. So I think there are several announcements in this budget which actually shows the beginning of our journey in the sustainability path.
So, Renan, I'll hold you there. I need to understand there were some more things, good points you brought up there. Um, is it that beyond the very typical infra spending that we are talking about, there's also a manufacturing thrust which the government is giving, which is saying that, look, we are supporting domestic industry, we are creating an environment where more jobs can come in, especially, it could be electronic goods, it could be various other segments. Is that part of that whole Atmanirbhar Bharat and Make in India campaigns?
Yes, of course. There's a big push to manufacturing and manufacturing in India. Clearly, the PLI scheme is the kind of a torchbearer scheme where the government is banking a lot on the building of manufacturing capacity on the back of it and the generation of jobs. It has announced that it will be about 60 million jobs that will get created through these PLI schemes. Besides that, on the defense sector, the announcement that 68% of the procurement will happen from domestic manufacturing is a big announcement. And then, of course, while we talk about customs duties being raised as not as a very good step, but there are certain ones for very small items like umbrellas and umbrella parts, etc. And we can go through the details to protect some of the small, very small manufacturing in the MSME segment. So there is a lot of push to manufacturing that has been given in this budget.
Ashish, same question to you. You agree with Ranen on the
No,
manufacturing thrust?
absolutely, absolutely. It's a shift from consumption to capex and manufacturing, and you could hear it all throughout the speech. In terms of the benefits they provided for manufacturing, the encouragement which is given to PLI. I was just reading that we are very close to signing a FTA agreement with UAE, which means again great news for the textile sector. So very clear, very clear focus that this is a budget led by capex. Like Ranen said, I was going through the details, and it's roads, defense, railways, transfer to states and communications, which are the big beneficiaries. So very encouraging, great clarity of thought. I think one of the very silent beneficiaries to this also will be the real estate sector. They've added data centers as a part of infrastructure.
Yes.
And almost every client of ours today is setting up a data center. Any player I go to, any of the big business houses, they are all setting up data centers. So I think the way job creation will happen, if you really ask me, is it will be a big boost to the real estate sector. And that in turn can lead to significant job creation.
Okay. Now, just taking this thing forward, if we had to read a bit of the fine print, you know, one complaint was that not much was spoken about disinvestment and really how much has actually happened so far. But would you want to read into the fine print and tell us a little more there, and whether are you worried about the fiscal deficit being managed at 6.4%? Ashish?
So the world which we are coming in from today, actually having a higher fiscal deficit is taken as a credit. If you see the US markets, and the higher the fiscal, so actually it's positive for the market if you are opting for a higher fiscal deficit, which means you are really going for growth. So a higher fiscal deficit is really not a concern for us. I think Air India, I just wrote an article for Business Standard, and I've put a headline said ready for takeoff. And I think Air India is a big feather in the cap. The government was very confident that they're going to have the LIC IPO in this financial year. So I feel the commitment is there. I was also watching an interview in the television, and one of the interviewers asked the finance minister that what's happened about bank divestment, and she said it's on. I don't have to keep clarifying to you. So I'm quite optimistic about it, and especially Air India is a great message to the world that look, we are serious about it. People thought that we are talking in the air, but it's here and it's happened. We have an IPO of LIC which is coming in, and if you see for the first time, the numbers are quite realistic. So I was just talking to my economist, and he said actually we are much more optimistic for the first time compared to what the government says. So again, it's a relationship of trust which is being built. Just digressing a bit, the fact that you can, and Ranen can talk more about this, but up to 2 years, you can refile your returns. Now, this was a standard problem all our clients faced, where you file a return and the income tax officer disputes it, and then it becomes a big litigation matter, which continues. Almost every ultra high net worth segment which we deal with was facing this issue. Now, I think it's a master stroke. It will really reduce litigation. So, my take on divestment is positive. I think Air India is a great achievement. The LIC process, I'm given to understand, is at a very advanced stage. We are positive on this, Salil.
Right. Ranen, same question. Do you see?
So on the divestment, see, the issue is that we should not get too worried about what divestment has happened during this year and what will happen in future. Because earlier, when we looked at the number, the divestment number was more or less like a balancing number to arrive at a particular fiscal deficit. So we had very unrealistic numbers for divestment, like even the FY22 budget estimates was 1.9 trillion. Now, clearly that was really an overestimate. And given that the revenue collections on the tax front has been so strong and so buoyant, that the government actually doesn't need that divestment money to that extent, what was budgeted for. So there is no real pressure to get the money in this fiscal year. Please understand that the government budget is on cash basis. The money comes in this year, it gets accounted into this year. So it is likely, it is likely that even the LIC divestment, depending on how the revenue performance happens over the next 2 months, it may be taken to next year. And the next year divestment targets have been taken at a very realistic level of about, if I'm not mistaken, 68,000 crores, which looks like a realistic estimate. And given the tax revenue estimates are on a very conservative side for the next year, I believe that the divestment targets will get adjusted either upwards or downwards basis how the revenue performance happens, because a lot of preparatory action has been done in this year. So we are very close to the divestment actually happening, and the timing of that, whether it's to be done in this fiscal year or the in fiscal year 23, is something that the government will take a call on, depending on the fiscal situation.
Right, right. Ranen, I'll need to address one more area. Usually direct taxes is something which always gets a lot of attention from, all segments of society. Uh, how do you see really whatever tweaking has taken place, the key elements of tax reforms, how has that gone? Because you spoke about this issue right in the beginning.
Right. So see, the direct tax, I think the there has not been, I would say there has been not been major changes. So the one of the principles that this government is following is a predictability of the regime. So there has not been many changes to slabs, rates, etc. that have been announced, but rather the announcements are more towards taking or rationalizing or simplifying. So if you look at the capital gains tax that has been announced, what they have said is
Yeah.
that it will be it for all categories. It is being brought to 15%. This is charge part of it. Earlier, it was for different categories, different numbers. So similarly, the all the announcements that are there is more to take away all these or remove all these distortions rather than again tinkering with the rates every year, because there is a rate which has been announced last year. The policy regime has stabilized, the revenues are buoyant, the taxpayers are compliant, so there was no real need for tinkering with it. And of course the government needs to pump prime the economy, and it has put so much of money into capex. So given that there is not much headroom for the government to give more tax cuts. Means the government needs the money from the tax revenues. So therefore, I would believe that it is more towards the announcements are more towards removing the anomalies and standardization, and also the ease of taxpayer compliance. Like one of the items that Ashish mentioned is on this allowing revised returns to be filed in within 2 years. So those are the kind of measures that the government has announced on the tax front.
Okay. Ranen, could you also help us understand really the announcement made towards virtual digital assets, putting a pretty large, hefty tax of 30% on each transfer. Uh, what does that actually mean, and how would they go about it?
Yeah, so I think the key issue or the concern around the virtual digital asset, and read that as crypto and the NFTs of
NFTs.
primarily. So the key issue around that was the concern. One is not the revenue part of it, but more about the regulation part of it, and knowing that where these transfers are happening, how the money is flowing, because there is always a risk of money laundering associated with these transactions. So if these are brought under the tax net and there is a requirement of 1% TDS, then it can be traced back as to who is buying and who is selling. So that is one aspect. And of course, the government has put in 30% taxation on it. It's almost like what you do in case of lottery income. So it's like if you realize a certain gain through transfer of these assets, then you have to pay 30% tax on it, and the buyer has to do a 1% TDS.
Right, right. Uh, Ashish, I'll come back to you on this. Taking it forward now, are there any areas which you think the government has not yet tackled? I mean, is there an elephant in the room which they don't want to talk about?
Uh, Look, not really. Just taking, I just wanted to add a bit to what Ranen said on crypto.
Sure.
I think the government has made their stand very clear. They want to make sure that any of the wrong money laundering or the unfair practices which are happening by a simple tax and TDS, they've got it under control. And the second thing is they're coming out with a bill. So what they've done is they have very clearly discouraged the retail investor from getting into something which is speculative. So they've very, very clearly defined their stand on it. I think in the next couple of months, we will have a very, very clear bill. As far as an elephant in the room, not really. I feel this is a move towards transparency. Maybe later on we can talk a bit about these green bonds, the changes which they've done in Gift City. People have underestimated the education. They want to allow foreign universities through Gift City. So I think very silently, actually, a lot of changes have come in, and at the right time we can take up this discussion. So my take is there is no elephant in the room. They've been very transparent this time with the fiscal deficit numbers, tax numbers. Of course, there can always be small things, which we can debate about, but very positive about the approach of the government.
Okay. Ranen, one element was that people were saying that there's still not enough rationalization done as far as the amount of tax which some individuals, particularly the higher income, pays. And do you think there's rationalization which needs to be done on that when we look at issues like dividend tax and other things?
So I think if the expectation was that whether the tax rates will be brought down, so I think that expectation was not there because everybody, as I mentioned, they realized that the government needs the revenues, and it would not have looked good if there was a rate cut at the higher end of the spectrum. Rather, there were talks of actually whether the government will go for a wealth tax, etc. But I think the Honorable Prime Minister himself has said that we should not be penalizing wealth creators. And following that statement, the government has stuck to it, and even there has been no such measures like wealth tax that has been contemplated. So we were not expecting any rate cuts at the higher end of the income spectrum.
Okay. But do you feel that it needs to be addressed in coming years at some point?
So yes, possibly, because what is happening is that the data shows that there have been some outmigration of high net worth individuals. So we really can't point out we don't have a study or an analysis on these reasons behind this migration of high net worth individuals, and it may not necessarily be only tax. There could be multiple reasons behind that. So. There is, of course, means if you are having a tax rate that is higher, and with inflation, and as the time passes by, there will be more and more people who will be coming into the higher brackets of income, and if there is not, and actually it's a very small percentage of people who are there at that end of the spectrum, and if it sends out a more positive signal by giving some kind of rebates in future that the government may consider. But at least for the next 1 or 2 years, when the government needs a lot of money to pump prime and bring the economy back, because please remember that we have lost 2 years of economic growth. We are at where we were in FY20. So clearly the economic growth graph has to catch up with the growth rate that would have been there if the pandemic was not there. And to be able to do that, the government will need to do a lot of investments. And for those investments, the government needs money. And therefore, it will have very little headroom to further give tax concessions.
Right. Ashish, is this something which you've heard from some of your clients?
So
Be closer to the ground.
actually, no, absolutely. Actually, the government has given tax concession this time. So if you see unlisted, and Ranen can go into the fine print and explain more, but if you see unlisted shares, debt, the surcharge has been brought down to 15%. In my view, it will be a benefit to most of the clients because this year a significant wealth creation has happened in the unlisted market. You've seen the number of unicorns, the number of profit taking which has happened. What I'm also given to understand that in the next 2 to 3 months, we will have regulations around venture capital, ESOPs, etc. So the good news for us is that there is some benefit to this segment of the investors. Were our clients expecting a cut in tax rates? No, because like Ranen rightly said that we've had 2 years of a very tough economy. So the fear was actually of a increase in long-term capital gains of some other surcharge coming in. So this stable, predictive tax regime, I think, has been good, and the benefit which the government has given to the private sector in terms of capital gains clarification, I think will almost add 4.5% of gains to our clients. Finally, if you see the corporate tax stability encouragement given to venture capital, a lot of capital is flowing there. So there, the tax environment is very, very favorable. The question is, should we bring our tax rates down the road? Absolutely. The surcharge for the ultra high net worths should be looked at maybe at a future date because it does lead to cross-border tax arbitrage. But in terms of corporate taxability, in terms of the benefits which we are giving to venture capital, I think we are very much there.
Right. Ashish, there are a few things that they've started to do, which the government has started to recognize on the importance of startups and what they bring to the ecosystem. How would you look at some of those announcements? Agri-tech and others.
Yeah. So, like I mentioned, that for the first time, or I would not say for the first time, but the government was very clear that they want to be business facilitators. So if you see, while we have spoken about capex from the government side, but I think it will be restricted to road, railways. But the biggest thing out of this budget is the government says we will play a supportive role in businesses and agri-tech. Like taking an example of Gift City, what they've said is that foreign universities can come and set up businesses there. They are allowing international arbitration over there. Derivatives, again, are going to be tax-free for derivative traders who want to meet their financial managers who want to be based there will have tax advantages. So if you see the tax benefit for startups, again, has got extended by a year. So the body language is very positive, and again, backed by tax incentives benefits, So I think it will encourage more and more entrepreneurs to go out on their own. Capital raising will become easier. Sitting here, I see a lot more capital flowing into India. And of course, the recent China turmoil again works to our advantage.
So you Ashish, you'd say that very clearly we could be on that 8% growth path. We would be able to achieve that, right? Going ahead, FY23, maybe FY24 might start to narrow it down a bit, but at least for next year.
Looks like the capex cycle will finally take off. So this is something the private sector is expecting. Looks like the capex cycle will take off. Manufacturing seems to be on a positive side. Financing should be available, and of course, one casualty will be interest rates, So interest rates will go up, but we are not of the school view that they will rise very, very sharply, So just digressing, if you see globally, interest rates are expected to go up. But my view is that central banks don't want to damage capital markets, So I was just reading reports of banks which had predicted 2 interest rate hikes and now are predicting 5 interest rate hikes. But my view is that governments will be watching inflation and interest rates very closely, and they'll try and do their best, for this.
Ranen, same question.
So I think the growth rate of 8% next year is quite possible if we are able to spend the budget that has been allocated for capex, because it will have a lot of externalities that can be generated. Plus, it is very clear now that the after this third wave, the contact services or the hospitality and the contact services sector, which actually was a very large segment of the economy, has been impacted the most, and that is going to come back strongly in FY23. So that part coming in, and of course, we also have the base effect because the economy is at a lower base because we are almost 2 years behind. So we have to take that also into consideration. So given all that, the spending, the capex spending, the services sector coming back strongly in FY23, and the lower base effect advantage that we have, I think 8% in FY23 should be achievable.
Okay. And would the macro environment start to make it more difficult when we look at, Ashish, you spoke about the fact that, interest rates hikes will come. There will be liquidity crunch, across central banks, which they've already indicated. From a pure business activity, how now with the budget, over, what happens? Is business going to resume as normal? How do you see it? Assuming that, of course, Omicron, the third wave does, subside quickly.
Yeah, so Salil, one good thing is that the budget is becoming a less and less important event every day. So it's not that the future of the economy depends on one such event. I think for India, we are in a sweet spot. I see a lot of capital availability. Like we just heard about these green bonds, which public sectors can issue.
Yes, maybe you could highlight a little more about that. Yeah.
Yeah, so Ranen spoke about sustainability, and I think this is the single biggest source of financing which will be available. I was just talking to some global investors last week, and I asked them that what would you want from India, and they said we would love it if you can bring in some sustainable energy bonds. So in my view, global investors will just lap up these green bonds which we are going to issue, because these are going to be issued by the government or the public sector, or sovereign bonds. I think. That's a great move which we've done. So I think capital availability for India will still be good. I see us quite well placed, because we didn't really cut our interest rates too much. So compared to the world, and just to recall, it was not mentioned in today's budget, but Indian bonds are likely to be included in the global indices, which again means a lot of the world money coming into our bonds. So in my view, capital availability will be still good for our economy. And that, along with the capex, along with the economic cycle picking up, a bit of luck, a bit of taqdeer and tadbir, both combining, I think should work in favor of India.
Ranen?
Yeah, so I completely agree with Ashish that see, the thing is that it will be in the first half will be a government-led push. The second half will be government and the private sector, the capex also slowly kicking in. So those two will happen. And of course, as Ashish mentioned, there will be auto allocation of capital to India once we are part of the global indices. So I don't think that capital would be is going to be a challenge. It will be the appetite and the customer segment, the sentiment that is there amongst the customers or the consumers rather, which is going to get into play. Because how the sentiment changes is something that we need to be watchful about, and the sentiment will depend on hopefully no other major variants coming in during FY23, and of course not a very major kind of risk to the financial markets, because there's a large exposure of the households. Very large number of households are exposed to equity markets. That is the number of demat accounts that have been opened, and the majority of these demat accounts, where I was looking at the data that the majority is for households with income of less than 10 lakh. So there is a huge exposure there, and we just hope that there is no major shock to the financial market because of whatever liquidity contraction and the monetary policy tightening that we are going to see. So as long as that doesn't happen, and the counter of this increase in interest rates by the US Fed and the other major central banks, if that is countered by our inclusion in the indices, the global indices, and auto allocation of funds to India, I think we should be in a good place in FY23.
Okay. So Renan, do you also expect that going ahead something needs to be done directly or in a more direct, in a more focused manner towards small businesses, or they would there's enough already.
No, so I think, see, for the small businesses, one thing is that one good thing, and this we had put in as pre-budget expectation, was the extension of this credit guarantee, the guaranteed loans. That scheme is there from the government that has been extended till March 23, and an additional 50,000 crore has been allocated to that. One thing that needs to be done is that these loans need to be firstly granted and then disbursed. So a big push, certain institutional and governance measures to ensure that there is a little bit of more risk appetite at the level of the bank managers is something that the government could push for, and the Department for Financial Services could push for. So that's, if that happens, I think the businesses will stand up if they are given the opportunity and access to capital. People are quite entrepreneurial and they will stand up. And I think the startup story, I think Ashish mentioned, and the economic survey presented a very interesting data that now we have 500 districts, 500 plus districts, which have at least one startup. So I think this entrepreneurial culture across the country is growing, and these small businesses and startups, they need to be supported. And if they have access to credit, I think rest they will take care of themselves.
Ashish is a good point. Renan brought up. Do you see that happening? Because you know, credit growth is still weak here. So, when would that start to improve?
Yeah. No. So just to add to what Renan said, so just to give you an
Sure.
example, they provided impetus to gems and jewelry industry. So this time they've talked about digital skill development. They've talked about setting up a digital university skills program. I think there's a major focus on the logistics sector. So actually, Salil, they've drilled down to certain sectors and they've come out with plans on it. Credit growth, definitely we see from here. I personally find it very difficult to comment in terms of percentages. Somehow my economics team gets it right, but in India, numbers can be played either way around. But definitely from here we will see credit growth. We are very positive on banks. I think banks should do well here. But for clients, of course, they will have to realign their portfolios. From consumption to capex and industrials. But credit growth should definitely go up from here. We are quite, again, positive about it. And this time, certain industries like gems and jewelry employs a lot of skilled and unskilled people. We have a huge trading operation in Surat and parts of Mumbai. Again, they've focused on benefits there. So I was reading, I've not had a chance to read all the fine prints, but there is an effort made to encourage industries here.
Right, right. So great, comforting words indeed. I'm very happy that Ashish, you, and Renan have joined in for this special session. For paucity of time, we'd have to end it here. But thank you very much for giving us, an insight and a direction into where India's economy could grow over the next 12 to 18 months. Thank you, both of you, for joining us for this special session, which is presented by IDFC First Bank. Thank you.